Hello, in this lecture, we're going to define income summary. According to Fundamental Accounting Principles, Wild 22nd edition, the definition of income summary is temporary account used only in the closing process to which the balances of revenue and expense accounts, including gains and losses, are transferred. Its balance is transferred to the capital account or retained earnings for a corporation. So what we're talking about is a temporary account, meaning it's only going to be used in the closing process, and it's going to be zero before the closing process and then zero after the closing process. This is used in order to transfer the income accounts, which is revenue and expenses, the income statement accounts, into it before we then close that out to the capital account or retained earnings in the case of a corporation. Let's take a look at a quick example. We see the income summary account in the trial balance here. When you look at a normal trial balance, you may not see the income summary all the time because it's going to have a zero balance unless it's in part of the closing process and therefore may not be included all the time. However, the closing process often has this four-step method involved in it. In order to use that method, we have this temporary account, also can be called a clearing account, meaning it's going to be zero before the process, zero after the process. Goal of the closing process is to close all the temporary accounts out to either owner's equity or retained earnings. In this case, these owner's capital account. The four-step method first closes out income to the income summary, and then it closes out expenses to the income summary with this entry. Then what would be in income summary at that point would be net income, which in this case would be 88,980. Once we recognize that we have zeros in the income statement accounts, we would then use this entry to then close out the net income we just put into the income summary to where we want it to go, capital account in this case, or retained earnings in the case of a corporation. That's why it is now zero again. You'll note this last transaction here, that's to close out the draws. Draws is not going to be part of the income summary. It's not going to go in and out of the income summary, nor would dividends in the case of a corporation.